Let's get the take from Dominique Dwor-Frecaut, a macro Hive senior strategist, joins us now. Dominique, fact or fiction? What do you think?
Sadly, fiction. I mean, just look at the breakdown of the data. Core goods prices that were falling, actually stabilizing, and despite a strong trend of deflation in used car prices. So I think the gains from the improvement in global supply chains are over, and price stabilizing. Look at shelter price inflation. You know, where is that disinflation that we've been promised on housing? Look at property prices. They are stabilizing. Look at the Zillow rental index. It's stabilizing. Show me the disinflation there. And then, you know, core services excluding housing, when you have unemployment at the lowest level in 50 years, wages can only rise. The reason we have seen a slowdown in wage growth is because the labor market is normalizing. So overtime use is going down. People who are not forced to work full-time are now working part-time. All these are great news for the economy, but bad news for disinflation.
I wonder then, clearly we're going to be in this uncomfortable place for longer, Dominique, but how long? Is there a possibility that trend inflation just sticks around 4%?
I think it's probably going to go up rather than sticks around. If we have a reversal in energy prices, when unemployment is the lowest in 50 years, we are off to the races. What's brought the disinflation is a decline in energy prices, because we are in a high inflation regime where everything is correlated with everything else. And when that happens, core and energy inflation become correlated, as we saw in the 70s and 80s, and as we saw since the pandemic. And so if we have a reversal of this energy deflation, we are going to see core move up again.
Dominique, I mentioned earlier your terminal rate call is very high. It's about 8% for the Fed. And I'm wondering, how do we get there then with this scenario? Like, do they just keep hiking now, or do they stop because they see disinflation, but then they have to catch up later? How does this scenario play out? Because it looks much less insane than it did like 8 months ago when we were at 2 and you were like 8%. I mean, we're going to be at 5 very soon.
So, first of all, the 8% is not something I plucked out of thin air. If you look at every Fed tightening cycle since the 1960s, it starts when the gap between the Taylor rule and the actual Fed funds rate is big, and it ends when the gap narrows or is zero. And right now, my Taylor rule Fed funds estimate is around 8%. Maybe, we'll end up around 7 rather than 8, but much higher than we are. So my scenario is that, for starters, in March, the Fed adds one or two hikes to the terminal Fed funds rate. Then mid-year, we have a recovery in energy prices because China is coming back on stream. That triggers a recovery in core inflation. The Fed is behind the curve and tries to catch up, and towards end year, maybe in the December SCP, that's where we see the terminal Fed funds in a 7 to 8% range.
Dominique, a lot of digital ink has been spilled about the fact that financial conditions have been loosening. Probably doesn't help as we're looking at now equities are rallying. I was talking to someone who said that Powell has essentially miscommunicated, made a policy error by giving up on trying to control this market, on trying to jawbone. What do you make of it?
So I totally disagree with that. I think what Chair Powell has realized is something, by the way, which has been a topic of internal discussion at the Fed for years. What he's realized is that jawboning the market is a losing proposition, because if you jawbone, you have to convey a much greater sense of certainty than you really have about the economy. So you start making predictions about where the economy and therefore where the Fed is going. The market thinks these are promises, it's positions accordingly, then you have to react and again, and all you end up doing is create unnecessary market volatility. I think that's what Chair Powell has realized. That's why he's no longer trying to jawbone. But for sure, I mean, I'm really feeling confident about this. He is watching financial conditions very closely.
Okay. Dominique, I'm afraid that's all we have time for. So great to speak with you this morning. We've got our first vote for fiction. That's Dominique Dwor-Frecaut, Macro Hive Senior Strategist. Still ahead.